Outlook 2026, Controller's Playbook, a roundtable panel discussion brought to you by the Controllers Council. My name is Neil Brown, Executive Director of the Controllers Council. And before I introduce our expert panelists and our partner sponsor, let me share some brief housekeeping items. This webinar is CPE eligible with 4 polling questions, so please answer each poll. And if not CPE, please answer to benchmark your peers. Also, we'll have a quick survey at the end of the presentation, so please complete. Next, we'll have Q&A at the end of the presentation, so use your GoToWebinar control panel to ask our experts questions. And finally, you'll receive a link to this presentation in the next 24 hours, so no need for notes or screenshots. With that, I'm very pleased to share a word about our partner and sponsor. Paystand is revolutionizing B2B payments with a modern infrastructure built as a SaaS on the blockchain, enabling faster, cheaper, and more secure business transactions. Paystand's mission is to reboot commercial finance by creating an open financial system. Learn more at paystand.com. And with that, I'm very pleased to introduce our expert panelists, a veritable dream team of corporate finance and accounting. Christine Gu is SVP Finance and Chief Accounting Officer for San Francisco-based Clarify Health Solutions. Christine Gu is an active CPA with more than 20 years of F&A experience. Prior roles included VP of Finance, Chief Accounting Officer, Corporate Controller, and a public accounting career at KPMG. Christine's experience includes both private and public companies, from startups to public ready, and she's managed multiple IPOs and SPACs. She earned a BS accounting from San Francisco State University and was the Controllers Council 2022 National Controller of the Year. Genevieve Hancock is Principal Consultant and owner of G. Hancock Advisory, providing technical accounting, finance, and fractional CFO services for several firms. Most recently, Genevieve was CFO at Germ-Free Laboratories, a biotech life sciences organization. Her prior experience includes a mix of public filers and private equity-backed organizations, including the Walt Disney Company and ExactTac, and public accounting experience with PwC and BDO. Genevieve is a speaker, author, and licensed CPA in Virginia and active in the Virginia and Florida CPA societies. She earned her bachelor's in accounting from William & Mary and studied English and business at Tulane University and is currently working on her executive doctorate in business administration at Crummer Graduate School of Rollins College. Welcome, Christine and Genevieve. Okay, so welcome, ladies, and let's get right into it with our first question. And really, we always start with, tell us a little bit about your company, your role, your day-to-day activities, and then maybe follow up with what some of your top specialties or expertise are. Christine, do you want to kick it off?
Yeah, I'm glad to. Hi, everyone, and thank you for having me, first of all, and it's my great pleasure to be here. I want to thank the Controllers Council for hosting this event, and a big shout out to Paystand for sponsoring today's discussion. So I'm Christine, and I serve as the SVP of Finance and CAO at Clarify Health, where I oversee accounting, FP&A, treasury, compliance, and financial operations. So my day-to-day focus is balancing operational scalability with strong governance. What that means is we ensure we can move fast as AI first company while maintaining audit readiness and compliance discipline. So I sort of group my expertise into 3 areas. So first is scale finance infrastructure. So what that means is taking companies from like a very messy build stage to a clean audit stage, and then to an IPO ready stage. So second is navigating complexity in revenue recognition and with this dynamic business models, especially as companies evolve from SaaS to a more AI-driven pricing models. And third is modernizing finance with AI and automation, while ensuring there's still strong governance and control in place. I would say the combination of efficiency, accuracy, plus controls is really what I focus on day to day in growing the company.
All right, well, thank you for that. And Genevieve, how about yourself?
Thank you for that, and thank you, Christine, for that very detailed introduction. Neil, thank you for having me again. I know we've worked together in the past as well, and thank you to the Controllers Council and PayStand for the sponsorship on this. So I'm Genevieve Hancock. I am an active CPA in Virginia. I've worked with a mix of public filers and private equity-backed organizations, as well as now with large not-for-profits. So I own my own company, and I've been specializing in technical accounting, process consulting, as well as fractional CFO work. So a couple of the areas of strengths and expertise, similar very much to Christine's actually, include the audit readiness and the IPO readiness background, specifically around technical accounting projects, implementation of new accounting standards, including going back to 606 implementation, complex modeling, 842, CECL, and software as a service, and internal use software accounting. After that, I would state that implementation of budget modeling and FP&A also is something that is a strength from tangential to technical accounting. And then a lot of my most recent experience actually includes streamlining and creating the new processes around technical implementations to bring in fast closes. The close process, especially the last couple of years, we've been through a ton of changes as it relates to COVID, work from home, in office, the Great Resignation, the pipeline issues that we've encountered on the CPA side, and now going back into processes and an ever-changing economic and macro landscape. And so bringing in that closed process and bringing it back down to what we were seeing originally is something that a lot of different industries are being impacted by, especially in the healthcare space, the manufacturing space, anything that's been impacted by inflation. And so that goes together with the audit readiness as well to make sure that you get those timely and accurate financials for both the audit purposes and management reporting.
Awesome. Thank you, Genevieve. Thank you, Christine. So before we get into our panel, not this introduction, we're going to do our first polling question. So let me cue this up. And please answer this at your earliest convenience. All answers are confidential and anonymous. And not CPE, please answer to benchmark your peers. So we'll give you a few seconds on this one. And some of our polls today will lead into the panel questions. So we'll reference them, the answers pretty quickly. A few more seconds, please. And we've got a lot of smart people, so they're voting fast. Let's share the results. Where is managing risk and regulatory compliance in your priority list? It is a medium priority for 51, a minor majority, 51%. followed by a top priority for 39%, and only a low priority for 6%. So thank you for that, audience, and that will lead into our next question, or our next panel question. What are the key types of regulatory compliance and/or accounting laws that you focus on? Genevieve, why don't you start us off?
Wonderful. Thank you again. So I would say that the key types of regulatory compliance and accounting laws that I tend to focus on starts with FASB, but in a consulting and advisory environment, it really depends on the type of company. So when I come into an organization, generally the first questions I'm going to be asking are, what are the key areas of both legal and regulatory risk, but also who are the key partners in compliance and in legal that I need to discuss with. Now, accountants tend to think of regulatory as only in the debt covenant environment, SEC filing environment, but there could be other impacts as well as it relates to, if you're in the financial services area, whether you have to report into the banks, whether you have to report in for something around export as it relates to manufacturing environment or technology, any of the governmental standards that you're looking at. Now, I'd also say that it depends on the type of company. Most of my background has been with SOX compliant environment, but if you're in a private equity environment, then you're not looking at internal controls, you're looking at quality management standards reporting, and you're looking at the audit reports for financial standards. Then you also have to assess whether you have the statutory compliance. My most recent client is actually a larger not-for-profit organization that I'm working with. And so we're looking at tax compliance and 990 filing. We're looking at statutory reporting for the business unit environment, and we're looking at audited financials. But then there's also your 403B or your 401k audits, and whether you're getting your 5500s filed for any of your employee benefit plans. So the first thing that I do is kind of make a list of what are those key areas of regulatory compliance and accounting laws and law tangentials that you have to make sure that you're hitting on time and meeting the deadlines.
Great, great summary. Christine, how about yourself and Clarify?
I would bucket the key regulatory and compliance area into 4 categories for us. Number 1 is GAAP, specifically revenue recognition under ASC 606. This continues to be one of the most complex areas, and it becomes more nuanced as business model evolve. Right? For example, with AI-driven or usage-based pricing, you are dealing with variable considerations, hybrid contracts, and sometimes non-traditional performance obligations. So the challenge is not just applying the standard, but it's interpreting it in a way that's consistent, defensible, and scalable. So we spend a lot of time making sure our revenue policy can handle new products and pricing innovations without breaking compliance. So second would be, I would say, internal control or SOX readiness. Even as a private company at Clarify, I still believe that in operating with kind of like a public company discipline early on is beneficial. What that means is we have a very clear segregation of duties, structural review and approval processes, and then maintaining strong documentation and audit trails. Because if you want to wait until you're approaching an IPO to build controls, it's extremely painful and disruptive. So for us, controls are not just about compliance. They are about building a very solid foundation that allows the company to scale confidently in the long run. And then the third area that Genevieve has touched upon, right? Tax compliance is definitely an area that we focus on. And I will specifically comment on sales tax and multi-tax complexity, because this is an area where I think a lot of people underestimated or overlooked. A lot of companies assume that because they're like the early stage companies assume they are in a net loss position and their tax risk is low, but that's not true for sales tax, right? As long as you have revenue. And states are very aggressive, and Nexus rules has expanded significantly over the last years, past over years. And I've personally gone through a couple of sales tax audit at private companies where this was overlooked by either my predecessor or by the outsourced accounting function. So no proper nexus analysis was conducted, or no tracking of sales tax exam certificates, no proper tax billings, and no estimate of tax exposures. So it results in pretty significant penalties and back payments. So it's a very painful lesson learned for those startup companies. So I would recommend treating sales tax compliance as a priority early on, not something to defer. And the fourth category, I would say, is data governance and emerging AI-related regulations. As finance become more and more data-driven and AI-enabled, we're increasingly responsible for ensuring the data accuracy and integrity, and also maintaining proper access controls. Also, transparency, making sure having transparency and auditability of outputs. So even though regulators are still kind of catching up on this, the expectations are clearly moved towards greater accountability around how financial data is generated and used, especially when AI is involved. So overall, the theme across all this is it's not just about technical compliance. It's about building a system and process that adapt as the business evolve without creating additional risks.
That's a very succinct way to put it, Christine. I would agree. And one of the key takeaways that I had written down, it was that compliance is not just a checklist. It has to be dynamic to the environment that you're in and adjust to the market as you're progressing. Specifically, everything you said around AI, I completely agree with, especially in this environment.
Neat. Well,